So you want to make it easy? You take all the debt that exists, use that as a proxy for all the money that exists, and divide it by all the gold that exists, and it's somewhere north of $40,000 an ounce.
40,000.
Oh yeah. And I know that sounds outrageous, and people are going to go, oh, what is she talking about? It's only $2,500 an ounce. We'll go back to 1900. What is the face value of this coin that was minted in, this happens to be 1908? $20. So if you had gone back in 1908 and said to a citizen, one of these days, right? They would have looked at you like you had three heads. Well, I'll go back a little bit further than that, because once the global central banks started raising rates in a very pervasive way, what they actually did was they ended a 40-year trend cycle, and there has been a systemic shift in the bond market, which is arguably the most important market because it's, well, other than derivatives, which are big fat bets, it's the underpinning, particularly of the treasury market.
Right.
It is the underpinning of the global financial system. And that's been showing a lot of stress and lack of liquidity, lack of the ability to buy and sell it without majorly moving prices since 2015. So, the system died in 2008. And then the treasury market, the foundation of the global financial system, started falling apart in 2015. And it's just gotten worse and worse and worse. So we're seeing all of the volatility. And if we look, like I just pulled up the VIX chart, you talked about what happened last week in the stock markets, but that was coming for a minute or two. But if you look at the volatility, prior to 2020, it was volatile since 2008 to 2020, but at a certain level. After 2020, between 2020 and then Monday, you can see it. You can see the pattern shift and the higher level in volatility into extremely overvalued fiat markets, stock market, bond market, real estate market. There ain't no place to go. This is it. This is it. Technically, as a technician, if you look on the charts, what you'll see is this huge, it closed here on Friday, and this huge gap where it opened on Monday morning. Mm-hmm. Okay? So closed at this price, it opened at this price. Right. At some point, all gaps get filled. And so what we're experiencing, yes, indeed, is a dead cat bounce where they're just filling that gap, but they're also trying to keep you stupid, right? Because if you get nervous enough, you're going to pull your funds out of the markets. Well, they're counting on the public to support the markets. So they're counting on the consumers to support the corporations. And these systems are breaking down. So this is not over with yet. And by the way, that's just what happened on Monday. What's happened a week or two before that with CrowdStrike and Microsoft, going down on a global basis. And then all of those Vanguard and Fidelity and all of those fund houses that are holding and managing your money, boom, they're also down. So people think that there's liquidity and they can get out whenever they want to. And boy, they're going to know 1 second before it, they're going to get out. Well, you can't. And that's what this is all being set up as. But even before that, what did we have? We had a banking crisis that nobody is even really talking about anymore. And a few weeks before that, the fintech banks, also a company, Synapse, became insolvent and locked, well, we don't know how many yet, but between 1 million and 10 million people are locked out of their accounts because they can't account for a lot of the money because of hypothecation. And I know this is a lot of stuff, but it's never just one incident There is a series of incidences that keep happening and keep warning the public about how fragile this system is. And if they can cover it up really fast, oh, everything is fine. Yeah, that was just a head fake. That was the title on one of that. Spiking VIX, just a head fake. No, it's not a head fake. It's showing you that we have some serious problems in the system. And one of these times when it gets too expensive, and I'll tell you, I'll come back to that in a second. But when it gets too expensive for the Fed to bail out in one invisible way or another, when enough risk has been transferred from the few, so from the elites, from Wall Street, from the bankers, from the hedge funds, from the private equity, to the public, then you watch. That next crisis will just be way too expensive to bail out, and everything will come crashing down.
And is that setting the stage for a CBDC? Is that how you? Is that pretty much a red carpet for a CBDC?
100%. They need, having studied currencies and currency life cycles, having looked at over 4,800 examples, and seeing what happens 100% of the time in every single financial shift, and we're doing the same things. They want you to think this time is going to be different because then you don't make choices that support your best interest. But it's never different. So yes, they need a big enough crisis to shove the CBDCs down our throat. Well, gold is the primary currency metal. Silver is the secondary currency metal. And while both gold and silver are used in every single sector of the global economy, silver a bit more so than gold. And so silver is also dealing with a slowing global economy. That just doesn't have the same impact with the primary currency metal.
Right. So what do you say to people who say, well, gold's hitting all-time highs, silver's close to $30. I don't want to get into this trade yet. It's already moved quite a bit. On contraire, there's probably a lot more room to grow, right?
Well, for one thing, you brought the word up perfectly. Trading, because we have been taught to short-termism, shortest attention span. If that happened more than 15 seconds ago, it's no longer relevant. That is really not true. Also, anybody that is counting on Wall Street for real price discovery, I have this bridge in Brooklyn that I'd really like to sell you. So, it's a lie, and it was created, again, going back to the perception management, it was created to keep you away from gold and silver. I think, personally, it is critically important, and we were just talking about this earlier today, it is critically important for everybody to understand the true fundamental value of any asset or any instrument. And here's the fundamental value, because they can hide trends. So what? We see the stock market going up, even if it's volatile, whatever, it's going up, and up to nosebleed levels. So people look at it and they get fear of missing out, and it hides the real trend, which is how much this stuff can actually buy you, the purchasing power. If you want to know the true value of this, go on the Federal Reserve's website, the FRED, F-R-E-D, and put in the search bar, purchasing power of the consumer dollar, and look on the left-hand index. And you know what you see down at the bottom where we're very close to right now? A big fat zero. And that's been true over 4,800 times. So what people need to understand, when I call this sound money, this is fiat money. This is government decreed money. Governments do not need to decree this money. Everybody on a global basis knows this is money. but it's the other side to the coin, right? So you have the fiat money on one side, and how's that created? Oh my goodness, it's created by debt. So if you want to know the true value of an ounce of gold or an ounce of silver, let's make it real simple, because here's a guarantee, and I can't tell you when, but I'll give you this guarantee. At some point, all assets, all instruments end up at their fundamental value. So if you look and you see that it's zero on the purchasing power from the Federal Reserve, not my opinion, from the Federal Reserve, then you know that the true value of this $20 bill is a big fat bupkis. It's zero. So it doesn't matter how high the stock market goes. I happen to have a $10 trillion Zimbabwe note here amongst all these currencies. This happens to be 500 million bolivars, right? And here's a million bolivars. What can I buy with that? Absolutely nothing. And yet in 2012, 13, 14, maybe even 15 and 16, in Venezuela, they had the best performing stock market in the world, but they were also in hyperinflation. So all that stock market does, it has turned everybody into traders. It has turned every single physical asset into a trading instrument for the banks to make money on, for goodness sakes, right? And it has misdirected you into something that they control. What's the fundamental value of an ounce of gold? The stock market says, to your point, 2,500, a little bit below that, all-time highs. Is that true? Is that all that that's worth? No, it is not. So you want to know how much that's worth? You take all the debt that's been used to create not just dollars, but all of the fiat money all around the world, take your pick, and you divide it, because there's an infinite amount. They can keep doing this as much as they want, right? I wish they would run out of money. But there is a finite amount of gold. That's it. It can be above ground, it can be below ground, and gold is indestructible. So you want to make it easy? You take all the debt that exists, use that as a proxy for all the money that exists, and divide it by all the gold that exists, and it's somewhere north of $40,000 an ounce.
40,000.
Oh yeah. And I know that sounds outrageous, and people are going to go, oh, what is she talking about? It's only $2,500 an ounce. Well, go back to 1900. What is the face value of this coin that was minted in, this happens to be 1908? $20. So if you had gone back in 1908 and said to a citizen, you know,
Good
one
point.
of these days, right? They would have looked at you like you had three heads. And now ask me, well, when's it going to go there? Because that's usually the next question. And by the way, the more of this that they do, the higher that number goes, right? I'll tell you when it's going to go there. If you're counting on Wall Street to tell you the true value, again, I have that bridge in Brooklyn. You're never going to get that, because that's not the market function. It's going to happen when all confidence, this is a con game, requires confidence, when all confidence is gone in the monetary system and in those leaders in the central banks and the governments, then to get the then we will enter hyperinflation. And I there's unfortunately not one doubt in my mind that we're headed to a hyperinflationary depression. And I also believe, for technical reasons, which you can ask me about, we can get into if you want to, that we're already in the early stages of that.